Good evening. Now we are playing ICI motto song. I request all the participants to put their right hand on their heart. Now I request our chairman, CA Fenil Shah, to address the gathering.
Thank you, Bishan Bhai. The chief guest of the evening, past president and the only president from Gujarat, our own CA Sunil Talati sir. The faculty for the evening, CA Paresh Clark, the regional council member and the chairman of Auditing and Assurance Committee of Ahmedabad branch of WRC of ICI, CA Chintan Patel, and you can see the curator of this whole auditing series. Secretary CA Bishan Shah and the committee member of Auditing and Assurance Committee, CA Kaival Shah, and all the members, I welcome you all to this evening, to the last session of this particular Auditing and Assurance series, or you can say the webinar series on standards of audit. Friends, before we move ahead, I would like to bring to your notice that on 23rd of June in the evening, we are having a very crucial webinar on what next, that is how effectively we are going to manage our offices and our practices in a new normal to come, because slowly and gradually everything is becoming normal amidst still coronavirus is there, right? So how effectively we are going to deal with our own practices, because now we need to start our practice. So on that, a very crucial webinar that 2 of 3 hours is organized, so that we will have in detail discussion and also the question and answers with respect to that. And in that, you can see our past president, CA Nilesh Vikamji sir, is going to address the same. So we can ask all our queries. So I request all the members to take the utmost benefit of the same. And apart from that, friends, now very less days are remaining for the 1st July to come. That is our own day, the day we wait for in the whole year, that is CA Day. And many might be thinking that this time, due to COVID-19, will not be having that kind of celebrations. I agree, I accept. But not to worry, friends, that is not a loss. To compensate that one full day celebrations, we are going to have 1.5 months of celebration starting from July, ending till August, right? And you will be finding all those activities, and these activities this year are not only going to benefit we the chartered accountants, but the chartered accountant students, not only chartered accountant students, but also the family members, because that kind of public centric oriented activities, very fruitful activities are going to happen, the benefit of which you can take sitting at your office or sitting at your home. So with this brief words, at the last, I would like to thank the chief guest sir, our own Talati sir, to accept the invitation and come to guide us. Would also like to thank the regional council member, CA Chintan Patel, for organizing such a good webinar series, having right appropriate topic, and very important, the classification of topics into groups, and for the very first time having very appropriate keynote speakers and chief guests to address and guide the participants at the initial time of each and every webinar. So Chintan bhai, the branch is indebted to you. Thank you again for organizing this. And I think so that seeing the response to such webinar series might be the motivation for us to again and again organize the webinar series on auditing and assurance standard. And would also like to thank Bishan bhai for providing all kind of support for the success of this particular webinar. And at the end, thank you to all the members. Without your support, this would not have been possible. So with this brief words, now I request Chintan Bhai to take the session ahead.
Thank you so much, Chairman of Ahmedabad branch, the dynamic leader of Ahmedabad branch, CF Anil Shah, and along with the financial secretary who has been always there shoulder to shoulder to ensure that everything becomes successful. It's really pleasure to have and to see that a lot of participation for the auditing standard series, because when we are discussing with the chief guest Sunil sir, we mentioned the fact that it's a really die-hard learning need of the Ahmedabad branch, which has made it really success to have more than 400 persons registered for not for 2 hours but for 8 hours CPE study cycle of the branch. So today we are, if you recollect that we start the series the day with the past president of ICAI, Mukund M. Chitre sir's blessing, and now we want to end the session and the series with the blessings and support and guidance of past president of ICAI, CA Sunil Tade sir. I think there is no need to introduce the sir. However, I would like to add few things about sir in relation to ICAI, because as ICAI, everybody knows you. You have really taken the charge of ICAI from the beginning branch to region to central level and across all levels, sir. You have done it. But in addition to ICAI, he has been the past president of CA Association Ahmedabad. He's been past president also of the All Gujarat Federation of Tax Consultants. And even after ICAI president, he has been right now serving for profession and giving as a mentor to a lot of youngsters, lot of professionals across the India. So, sir, thank you so much for accepting our invitation and joining as a chief guest. Because for us, it's very critical for us to ensure that we can end the series with none other than you for this auditing standard series. Now, I hand over this charge to Sir Surya sir to give his keynote address for the end of the series. Thank you so much, sir.
Thank you so much and very good evening to all of you. Chairman of Ahmedabad branch, CA Fanil, CA Bishan and CA Keval from Ahmedabad branch, regional council member, very active, CA Chintan, and all my other professional brothers and sisters who are listening to us and viewing to us all of on this last session of auditing standards. It's a great pleasure that none else than Sri Paresh Bhai is here, who is a partner of Bansi Mehta and Company. And let me start, friends, telling you the importance of the learned speaker and the benefit and advantages that you have. Because Bansi Mehta and Company is one of the oldest Indian firms of chartered accountants in India. And I had the pleasure and privilege to meet and take his advice as early as in 1979. So since those years, he was enjoying that very high pedestal credentials in the professional practice. Not only that he had been past president of the institute, but great ethical standards and value that he possesses is something that we all need to imbibe in our own day-to-day practice. And we are happy that his partner and president from the firm, Paresh Bhai, is here to give his view on that. So my endeavor would be not to trespass and engross in his jurisdiction with regard to the subject. But let me tell you some of the things which I want to tell all of you heart to heart. And let me start first that in spite of this being a virtual meeting, you are not forgetting to play our motto song. And that really starts the vibration in our entire body and mind and keeps us alert to listen and involve in that. Mr. Chairman, I would only say that now, because so many of chartered accountants are listening to this, but many would not be able to understand, many would not be able to pronounce it correctly, and many of them they don't know. It is only one slok from Arthved, but I have forwarded to you one new version of it in which English as well as Hindi words are also reflected. So if that motto song is now played in all the virtual meetings, all our dear members will be able to read what exactly is the pronunciation of each word of the sloka and its meaning, and that in turn would be more purposeful. So it's a humble request to you to kindly see that the motto song which we are playing is in turn understood and digested by all the members. That's very important, and it's my humble request to kindly go ahead with that. Having said that, let me tell you that I'm really lucky to be in this 4 sessions auditing standards marathon meeting. And more than that, I'm very happy that more than 430 members are participating in this. And all the 4 organizations watching would agree with me that had it been a physical meeting in Ahmedabad about the auditing standard, I doubt whether 100 or 150 or even more would have been participated. And the reason behind this is, let me be very honest and blunt in this, that we always feel that yes, auditing standard, and that to advance latest auditing standard, which have been recently amended effective from 1st April 18. Why should I learn? My 90% of the practice is taxation or GST. I hardly do any private limited company audit or public limited company audit. I don't have such big clients, and why should I learn this? This is the biggest pitfall or handicap or negative aspect of many of our chartered accountants. And it's my humble request to all of you friends, those who are listening and those who are not, kindly convey to them that you should always be ready with the knowledge and information when the client comes to you and not search for it. I can share with you, when I started the practice, I was told that yes, you should always be available in the office with books, material and knowledge. And it is not that when you are available in your office with books, material and knowledge, a client would come. But when a client comes to you, you should always be available with material knowledge and your physical presence and immediate reply to the question. So if you are not equipped and well versed with the latest development in accounting and auditing standards, we will be missing the client, and in turn we will be missing the practice. So for developing the practice also, knowledge and information of the latest accounting standards and auditing standards are extremely important. And why I'm using both the terminology? Majority of us are more harping on accounting standard compliance and auditing standard compliance. And the reason is again psychological. What is our duty as auditor is, after the accounts are over, done, ready for your audit, we do the post-mortem audit. After the audit accounts are over, we do the auditing, and we try to find out the faults, mistakes, and see that it really reflects true and fair view. So our by and large more job is to find out mistakes, if any, by error of omission or commission is there or not. And particularly when it comes to accounting standards, we all know that it is the duty of the management, the auditing, to comply with the accounting standards. And it is the duty of the auditor to see that the auditee has complied with the accounting standard, and if not, either he get it corrected or makes report of the non-compliance of the accounting standard. So again, it became a job of finding out the mistake or finding out fault with someone rather than the self. Friends, the most serious, most important, and most necessary element in your accounting and auditing practice, which is the basis of a chartered accountant, is to have complete and full knowledge of all auditing standards, and more than that, compliance thereof. It is you, it is we as an auditor, as a chartered accountant, who have to see that yes, there are appropriate compliance of respective auditing standards. And what happens? Because I am the auditor and I do the audit, and I am trying to see that auditing standards are complied with. But if I forget, who is going to check it? That was by and large the impression and the attitude of the members. But now I am telling this you not as a caution, not as a threat, but as a very humble request that now the time have changed. Post Satyam or post IIFL and post other episodes which we have seen in the newspaper since last 1 year, there are agencies who are now watchdog of watchdogs. They are the watchdogs of all auditees and all auditors. So be very clear. We have first and foremost FRRB, Financial Review Reporting Board, our own institute extended limb, which picks up and selects on random basis on computer around 100 to 200 various listed limited companies audited accounts and find out non-compliance of accounting standards and non-compliance of auditing standards. Now, when it comes to non-compliance of auditing standards, there will be direct action on the respective auditor, that is our own member, chartered accountant. So you have to be very clear that you don't miss out any auditing standard, failing which, if the audited financial statements done by you, which are published and are selected by FRRB, are picked up for the scrutiny, and perchance you have missed any compliance in any of the auditing standard, you will be held up. It may be that disciplinary mechanism will also come into play, and you will be required to give your appropriate explanation. So that's very important, friends. You have to be very clear that there is a very big monitoring system going on in our own institute. And mind well, this is not with a view to punish the members. FRRB's sole importance is to train, teach, and caution the members. So if they miss something, if they have genuinely made some error, they would be cautioned. And if there is a gross violation, gross non-compliance, they would be appropriately dealt with. So this is the fundamental importance of knowing and in turn implementing auditing standard. Second and third limbs are both NFRA as well as RBI and SEBI. So three more institutions are there in the government, in the country, who are also going to oversee your audited financial statements. So all listed companies will be verified by the SEBI. All financial companies, banks and NBFCs will be verified and overseen by RBI, and NFRA also, the superimposed authority which government has imposed on National Financial Regulatory Authority. So all these other three authorities are also going to see that not only the auditee, not only the client has done something wrong, but the auditor has also played his vital role correctly or not. That will be extremely important. And for that, observance and compliance of auditing standards is going to play extremely important role. So I'm happy that all of you have gathered here and have started to appreciate and understand. And we are lucky to have none else than Sri Paresh Bhai, as I told you, from Bansi Mehta and Company, who is really very experienced, very senior firm, and we can't find a better person to deal with this topic. Now, as you know, you have already dealt with SA 200 onwards in the first session, SA 300 and onwards in the second session, and SA 500 onwards in the third session. And today in the fourth and last session, we are dealing with SA 700 to 799. That is a later part of it. Later part in what sense? That SA 200 to SA 500 deal with various compliances and observation while conducting the audit. So all those standards were auditing standards were required while conducting the audit. And you have to see at various steps and various stages, you have complied with those standards. And when it comes to SA 700, it is forming an opinion and reporting on the financial statement. That is the final stage. And when I say final stage, it means the entire final decoration of the financial statement, the final presentation of the financial statement before the stakeholders and the readers of the financial statement. So that is most crucial, most important, and the final word from the auditors. What is written in the figures, what is mentioned in the P&L account and balance sheet are the figures, amount, and presentation. But what does or how do they reflect the financial statement truly, correctly, and in fair manner is going to be read from your final report when you are forming an opinion with regard to the true and fairness of that financial statement. So SA 700 was revised. You all are aware, you must be sometime thinking that as a chartered accountant, how many accounting standards I have to know, more than 32. How many auditing standards, almost same equal. And the way they are numbered, somebody feels that, oh my God, there are 799 standards. No, it is not so. They are so numbered because of we are following the international practice. And as International Auditing Standard Board has decided to name them so that they continue for the next century also to come. These are the numbers they are being given. So don't be afraid by the number of the standards. Oh, I'm reading 700 to 799. So be at ease when it comes to the number and nomenclature of the standard. But when it comes to forming an opinion and reporting on the financial statement, see, it is 701 deals with the auditor's responsibility to communicate key audit matters in the auditor's report. SF 705 and 706 deal with how the form and content of the auditor's report are affected when the auditors express a modified opinion or includes an emphasis of matter, paragraph, or any other matter, paragraph in the auditor's report. So what is 701, 702, 705, and 706 is what are the key matters. And these key matters are also important from a chartered accountant's point of view, friends, because if you are now elected or selected as an independent director or as an audit committee member or audit committee chairman, all statutory auditors in the board meeting, which is held every quarter, and in the final review, they have to present what are the key audit matters that they have observed and followed while finalizing the audit report. So these key audit matters are important. with regard to valuation, with regard to goodwill, with regard to inventory, with regard to various other accounting treatment, with regard to what steps they have verified, with regard to the statistical samples that they have chosen. And there could be many such matters which our learned speaker is going to deal with. But this is very, very important when it comes to the reporting of the financial statement. So 701 and 705 up to 706 deal with modified opinion. I'm not going into the detail of that. Various paragraphs are very nicely mentioned. Even the illustrations given are very important. I'm telling friends, and lastly, I would conclude by mentioning this, that we have formed a habit that daily morning when we get up, we have a habit of reading the newspaper. Similarly, please form a habit that moment you enter your office, you must open the website of the institute and you must see what are the latest notifications and informations provided by the institute affecting our day-to-day practice. That's point one. And secondly, if you are computers friendly, software connected and learned in that element and not habituated to pick up the pencil and read on the physical book like me and other elders, you must download all accounting standard and auditing standard in your laptop or in your mobile or in your iPad. And you must be ready and equipped with those accounting. Moment there is a question, you should be in a fraction of a second, open that respective auditing standard and refer the matter immediately. So this is my humble request to all of you, that not only that you learn today and understand what the learned speaker is going to share with you, but keep your accounting standard so handy that it is always available in your iPad or laptop. So you should not be in a position to find out and look for searching the matter when it comes to any question or query or compliance when you are sitting at the auditing. So with this, friends, I am trying to convey you the importance of adhering to the auditing standards. We are the one who are said to be watchdogs of the auditees, but now there are other watchdogs who will be watching us and telling us where you've gone wrong in complying with the auditing standard. So please be attentive what learned speaker Mr. Paresh Bhai is going to convey to you. Try to digest all of them and see while implementing. And for all those who are so thinking that I don't have any private limited or public limited company, I don't have auditors where I have to comply with the auditing standard, I would say I wish you all the best. If you are sincerely listening to and learning this auditing standard, in a very near future, you will be getting such auditees and such clients. Wish you all the best for them. Thank you so much.
Yes, sir. Thank you so much, sir. I think what is needed is that now auditing standard should be our topmost priority. And that's why I think there's one message to all of us, that we will keep from the lower or middle level priority to the top level priority. And as we discussed that, basically, NAFRA is our financial reporting authority. And with NAFRA, we have SEBI, RBI, watchdogs have increased. Now, what is needed here for us, that we have to ensure that we need to give a top priority, otherwise it will wash out. When Taradi sir said last, all the best, that means it was a sarcastic comment. We cannot even make us anything considered lesser point. We have to keep audition on top priority without doubt. Irrespective of the private company or public company, it has to be top priority. Now request Secretary Amdad Raj Bhai to give out of thanks.
Sir, it is said that what you do has a far greater impact than what you say. You are a true living legend example for the same. Sir, thank you very much for your words of wisdom to all of us. And sir, thank you very much that you have gifted Ahmedabad branch our young, dynamic and visionary Central Council member, CA Aniket Talati. Sir, and from your talk, I can able to understand that what is we all cannot achieve a perfection, but if we chase a perfection, we can definitely achieve excellence. And sir, thank you so much for coming and blessing all of us. Thank you very much. Yes,
I'll just one point which I forgot to mention, with your kind permission. When I was mentioning about FRRB, kindly see that this auditing standard 700 to 799 are effective from 1st April 18. That is all a financial audit which we will do for the period 1/4/18 to 31/3/19. So most of the 31st March 19 audits are already done. And now we are in the area where some have completed, others will be completing the audit for the year ending 31st March 20. FRRB at the institute has selected the financial statements of accounts up to 31st March 18 in last year. Now this year in March 20, that is ICI's year 21 onwards, all audited accounts for the year ending March 19 will be picked up, which will be covered by the latest standard SS 700. And those who have missed something in 19, at least for March 20 when you are doing the audit, please see that yes, these auditing standards which are effective from 1/4/18 will be very much there applicable for March 20 when your case is selected by FRRB. So you have to be more careful and more vigilant for that. I thought I must share that with you. Thank you so much.
Thank you.
Thank you, sir.
Thank you, sir.
And just one more point, as Bishan Bhai said that Talati sir gifted Central Council member Aniket Talati. Then just I add that one of the gift of Aniket Bhai and our council, which is very fruitful and useful to Talati sir's guidance, that we should regularly keep ourselves abreasted with the things by reading. And if you're unable to read, then we can watch. And if you're unable to watch, we can listen. And the biggest benefit of this is the digital learning hub. In digital learning hub, we are having the audio modules and video modules too. So I can say that, friends, you can take the benefit. If you want to really adhere to what Talati sir said, right, then you can take the advantage of the junior Talati sir's digital learning hub, and you can take the latest benefit of that particular thing. Thank you, sir. Thank you.
Thank you, sir.
Thank you. I think with this we answer this first inaugural session, and we can now go directly to the technical session. Thank you so much, sir, once again for joining here.
Thank you, sir.
Yeah. So now, before I move on to the faculty of the session, I think throughout these last 3 sessions, we all have learned one very important thing is that if there is no documentation, there is no work done. Second thing, planning and materiality is the most critical right now. And third thing, we have to use the technology. We cannot survive if we don't use technology. And for technology, I think there are a lot of softwares available which really can change the way you're documenting yourself. So audit checklists, templates, these all have been shared by all the faculties throughout the sessions. But my request, humble request to each one of you, please kindly use it. Our objective is achieved when at least 10% of you are going to start using the tablets from tomorrow, and do it from tomorrow. Then you can refine further. And this being last session, we also introduced the use of technology by introducing a poll for all the participants. There are 3 polls which I have launched, which we are going to launch during the session. First poll, in what you most like about this series. Second will be overall feedback of the series, and third, what should be the frequency of these auditing matters series in the future. So these 3 polls we are going to run through this particular session, and I request all of you to please give your poll opinion, and based on the opinion we are going to really work upon, and we ensure that we serve to the best of what you require. And now I request, before I request Keval to introduce faculty, my sincere thanks to the faculty, CA Paresh B. Clark, because our last faculty which was being announced, he was unable to really come up because of his some issues. And then Paresh Bhai was there, and he said that yes, I'm there to support. I will reschedule my timings and to see that the participants get the best and best of the efforts. And he comes from the senior firm. His experience on the audit report is one of the most important result for all of us. I request CA Keval Shah, coordinator, to introduce faculty. Keval, your audio. No, please try again.
Ishan Bhai, તમે કરી દો ને mic on.
Yes. It's my pleasure to introduce the faculty for the session. CA Paresh Harikant Clark, a chartered accountant with 35 years of work experience in diverse areas. Paresh sir has a rich knowledge of taxation, auditing and company law matters, and is a partner of Bansi S. Mehta and Company since April 1, 2003. Sir was also associated in teaching from 1986 to 2013 as an associate partner, as an associate professor in accountancy at Mitibai College of Mumbai. Sir is also the co-opted member of India's Committee of ICI and various other committees. Sir has also co-authored book titled Thumb Rules of Bookkeeping, published by Bombay Chartered Accountants Association Society, and also written various articles on Tax Sutra. With this, I would like to request Sir to take over the session.
Am I audible?
Yes, please.
Yeah. Okay.
Yes.
I'll share the presentation first so that we can proceed.
Yeah, Paresh bhai, just 1 minute. I think we have just launched a poll. So, just
Okay.
1 minute, can be a minute, so everybody can just poll and then we can move.
Yeah, sure.
Yeah. Requesting all of you to please click appropriate whatever you feel. This is going to be helpful to all of us when we really go for this. We should be now we can close the poll. We can go. Okay.
There are 8 seconds remaining. Yes, we are going to close the poll now.
Okay. And whether we will launch all 3 or only one?
Only one.
Fine.
So shall we launch the other one?
Please. No, I think afterwards. Let
Yes.
Paresh start. Paresh, please, over to you.
Paresh, you can share your presentation.
Yeah, I have shared. Is it visible?
No.
No, sir.
I've already shared. One second. I think I will have to go for the sharing.
Yeah.
Where is the? You will have to permit me again to share, or I don't know. That time it was being shared.
No, sir.
Now it is not coming. Now it is not coming. Again, you have to do it again.
Kishan bhi, please permit again. I think last time also the same thing happened. Please permit.
Okay.
Yeah.
So now you can share.
Yeah.
Yeah, now it is.
Yes, sir. Now it's visible.
Yes.
Respected past President Mr. Talati and member of Regional Council and Ahmedabad branch, I thank you everyone for giving me this opportunity to address the members of the institute who are generally, now I cannot say maybe Ahmedabad based. Probably this is a series on webcam, and web series anybody can attend anywhere. So good evening to everybody. At the outset, I must also say that I had very little time to prepare, so there could be some lacuna in the slides because it was only 3 days which I had. But I also thank Mr. Manish, who had made a presentation which he shared with me, and Mr. Jayendran, who is going to give the presentation tomorrow on the very subject at Western India Regional Council level at Mumbai office. So he's also, I've used his presentation. Now, this webinar at times is giving mixed feeling. Those who are attending, they can always say, okay, we attend, we don't attend. It's like, when I was taking lectures in college, and in my audit lectures, though it were considered to be some of the goods lecture, but people would not attend. And you also know that auditing lectures don't attend. So I feel, okay, I was giving lecture when nobody was attending. Today also I'm speaking when I don't see at least anybody attending. Though most participants, more than 200 or 300 participants are attending. So that's one feeling. And for a participant, it is fine. They have a choice to hear, not hear, and things like that. So it gives a mixed feeling. And whenever I give lectures on audit, I feel I'm going back to my college days and trying to explain everybody that how important audit is. Mr. Talati did explain how exactly it is going to be becoming very, very important for all of us for all time to come, with NEFRA being there, FRR being there, QRB being there. And apart from that, as it was mentioned, that we must also judge ourselves that are we doing what we are expected to do. And when we discuss about documentation, same thing again. Somebody had always told me that you plan, so your audit program, so you write what you do, that is your all query sheets and documentation, and do what you write. So first prepare a program and do what you write. So your writing is the program, and you do accordingly the audit program, and write what you do. These, if you know, then you have won half the battle as far as audit is concerned. Very important. Documentation is very important. And then audit conclusion and reporting will emerge, or it is an end result of what documentation we have carried out all throughout, or what audit we have carried out throughout. But how would you conclude? How would you report unless you have documentation? You have documentation to review, and 2 years down the line, if somebody is raising an issue, asking a question, then how would you be able to justify what you are doing? And that's where the documentation becomes important. So today's sessions covers SA 700, 705, 706, which are reporting standards. And then what was introduced is CAM, as we call it, Key Audit Matters, and 720, which has been revised. So now under 700, in our audit report, we need to have a reference of 720, which of course, I am not going to deal much in detail, but I would make a mention of it. Then, so this is the background which we have in this auditing standards. As you see, that is it a slideshow you are seeing, or you are seeing my other slides? So do I put a slideshow?
Yes, sir. Please put the slideshow F5.
Yeah. Okay. So now you can see the slideshow, right?
No.
And
yes,
the main
now
slide
it's
has
here.
come.
Yes.
Main slide has come.
Yes. Okay.
Yes.
Yeah. So this is an introduction, the background which we have been all talking about. The series of standard, as Mr. President, Past President, Mr. Talati did mention about that series, that 700 to 799, which deals with audit conclusion and reporting. And earlier we had auditing and assurance standard, as we used to call it, and we had SA 700. It was named as Auditor's Report on Financial Statement. Then ISS 700, due to crisis in 2008, got split. And then you have now SS 700, 705, and 706. All three standards deal with reporting. So first revision in SS 700 came in 2012. It came in 11, and then it was postponed by a year for implementation. So we deal with forming an opinion and reporting on the financial statements. And then, sorry, that sentence got repeated. Revision in SS 700. Then you had forming of an opinion and reporting. Then came 705, which deals with modification. I will discuss in detail each one of these standards. Then you have 706, emphasis of matter paragraph, and other matter paragraph for which Mr. Talati did mention. And those standard was revised. All of them were revised and made applicable for audit of financial statements beginning 1st April 2018. At the same time, you had, as I mentioned, the introduction of communicating key audit matters in Independence Auditor's Report, as well as SA 720, which was revised, the auditor's responsibility relating to other information. Of course, these are, sorry, I think there are transitions. So this is where the standards are. SA 700 to be used only in case of unmodified opinion. So, you know, you would say, what is this jargon called modified and unmodified? We'll discuss when it comes to. Because what we have so far learned is only one word. Either audit report is qualified or audit report is not qualified. But of course, you know, colloquially, we always say, is audit report qualified? So we will discuss all those factors as we go along. SS 705 is modification, which is to be used in case if there is a modified opinion. And 706 to be used when there is emphasis of matter. And of course, it deals with other matters also, which we generally use in many cases. Applicable from 18. Or this transition may take slight time. Okay. Then 701 and 702. 701 today is mandatory only in case of listed companies. But I do not say that one cannot use it. One can use it even if in case of unlisted companies. And when we discuss this matter sometime later, of course, many do not agree with me, but we will discuss that how in a COVID scenario, you might use this CAM for the purposes of one or two issues, even though it is not mandatory for even unlisted companies, small companies, and private limited companies. SS 720 to be used only in case of all companies. There could be some exceptions applicable from 18. Now, do we have the question answer session at the end, or we have a question answer session now?
At the end.
At the end. Okay, fair enough. So forming an opinion and reporting on financial statements, which deals with how an audit opinion to be formed, which is the utmost auditor's responsibility, and to give a clean report, as we always discuss, that is unmodified opinion, and what is the form and content is dealt with by SS 700. It also addresses the appropriate balance between the need of consistency and comparability in the auditor reporting globally. Because globally also these standards are applied. So therefore, it is not only on accounting standards, Ind AS or IFRS, where the global comparability should be done. It is even in case of an audit reporting. I mean, reader, the stakeholders, whether you have an international stakeholders, they should also be comfortable when they are reading these audit reports. So promotes consistency, and that, of course, any consistency will result in credibility of an audit at globally recognized level. Then promoters users understanding. If there were no standard of the manner of writing a report, then anybody will read anything, anybody will write anything, and anybody will read anything, and that is what is not expected. So identify unusual circumstances also. That is how the scope is. This applies to audit and not to reviews. Limited review, that quarterly limited review which we do, to which this does not apply. If there are agreed upon procedures which are followed, there is a separate audit standard on audit on their SRE. So those review engagement to which this does not apply. And it covers general purpose financial statements as per the framework, whichever is applicable. And what is this general purpose framework? A financial reporting framework designed to meet the common financial information needs of a wide range of users. The financial reporting framework may be a fair presentation framework or a compliance framework. Now, we will, these looks like a jargon, fair presentation framework and a compliance framework. Now, what do we mean by it? In a normal parallels, you will understand that fair presentation framework means it deals with the financial statements. That financial statement gives a true and fair view of the financial statements. So maybe if it is balance sheet, the statement of affairs of an entity, an organization, profit or loss in case of statement of profit and loss, and in case of a cash flows, if the cash flow statement is prepared. So it gives a true and fair view of all these items. So that is a fair value, fair presentation framework. It is a financial reporting framework that requires compliance with the requirement of the framework, which acknowledges to achieve the fair presentation of the financial statement, it may be necessary for the management to provide disclosure. So fair presentation is not only the accounts are true and fair, it also deals with that whatever the disclosures are required as per relevant framework, relevant standards. Like in our case, in case of companies, you have Schedule 3 disclosures also. So whether those disclosures have been made as per the requirement of Schedule 3. It may be explicitly necessary for management to depart from a requirement of the framework to achieve a fair presentation of the financial statement, and such departure are expected to be necessary only in rare circumstances. You cannot depart from the framework or a disclosure. Say now COVID is an extreme rare circumstances, but do we have any analysis made? Anybody has said that this is an extreme rare circumstances, so therefore you can depart from a requirement of the framework? This is a question which I am leaving everybody to answer. That, of course, this is very, very bold statement, and at no level this has been accepted. Everybody has got an exception. The borrowers have got an exception. Small-time traders, small-time businessmen, all have got some concession or the other. But please note that in these circumstances, we as auditors have not got any concession, and you cannot just do away with our duties under the circumstances which the whole world is in. auditor has to carry out its duty, has to make sure that accounting standards are followed as required, and audit processes are also followed as required. So therefore, even depart from a requirement of framework for a fair presentation. I'm not on an audit, but for a fair presentation, also there are no circumstances which have been explained or given to consider. And compliance framework, in a sense, whether you have followed the company law requirement, if there are laws applicable, you do have under 143(3) items listed, whether you have complied with 197(16) disclosure for a managerial remuneration. All these disclosures are there, or whether the directors are to be not disqualified or are not disqualified. So all those are compliance framework, which also we need to report. So financial reporting framework that requires compliance with the requirement of the framework, but does not contain acknowledgement as per the fair presentation framework. But if it is complied or not, which we will have to also mention. So SA 700, which was applicable from April 1st, 2012, and now SA 700 revised, as I may put it, which is dealing with, which is effective from 1st April 2018. So what are the major changes? Because I would not like to get into much of the details of SA 700 per se. So we look at what are the major changes, and then see where do we have to adhere to. The flow of reporting is changed substantially from the earlier SA 700. You will notice, and you have also last year during 18-19 given this report, prepared this report, and you have seen that the reporting has changed. The entire format has changed. And SA 700 is applicable for audit for all financial statement from April 18. That's fine. 700 applies only to the complete set of general purpose financial statements. So any SA 700, as we say, that it applies to. So then, what is the flow of the report? Earlier, what we had is we were giving the details about the company, and then we said this is the attached balance sheet, etc. Now it is the opinion which is the utmost important, and that is what is coming at the initial stage itself. So you have to give a title, then the address, whom you are addressing, that is addressee. Title is independent auditors report, report of independent auditors report of so and so company for the year ended. Also you can write as a title, or you can say on the financial statements. Addressee, of course, you would in most cases be addressing the audit report to the board of directors, shareholders. So then it will be to the shareholders. Auditor's opinion. Now this opinion which you were giving in a later part will be the almost like a first paragraph, and then comes this basis for opinion. Then of course you have to comment if there is anything to do with going concern. Then comes your key audit matter, emphasis of matter, then management responsibility, auditor's responsibility, other information, reporting of other and regulatory matters, and signature, place, and date. So what is highlighted is the auditor's opinion and basis for opinion. And as Mr. Talati mentioned, that it is possible that sometimes one has missed out to adopt this new format. Then one has to be careful that for 1920 audit reports which are signed, one uses this format. It's, in the computer days, yes, we are able to do a lot of work, but at the same time, due to the time of copy and paste, we would have told our assistant, or, well, okay, just pick up a last year's report and do, that's it. But that's, friends, things don't work that way. I would say today also, even if I have to finalize a report, I would go through right from the left-hand corner to the right, even verbatim same as of last year. So that's why sometimes I feel that we try to do too much, but no, there is a possibility that some error could have happened while printing, while typing, or a genuine mistake could have also happened last year, which you noticed this year, and then you need to at least correct it. And possibly some changes have taken place in law. Of course, this year your CARO has not changed, which was supposed to have changed because of the COVID scenario has not changed. So you have a CARO same as last year. But now going forward, CARO is to change. Next year, CARO is changed. So friends, when we are discussing this, I must also advise you that you may be busy doing audit for 1920, but please prepare yourself and prepare your clients for even 2021 CARO related preparation, because that's going to be an humongous effort which we have to go by. So in order that the reader does not have to search for the opinion paragraph, see what a stakeholder is looking for in an audit report is what the report is. See, when you go to go for your checkup with a doctor, etc., there are when the report comes, you are always looking at what is the finality in it. Do you have a sugar? You don't have sugar. Then you look at it, post, pre, this, that, etc., etc. But first thing what you look at is the final result, and that's what it is here. That your opinion paragraph comes on the top. So this is true whether it is, and that's true whether it is qualified opinion or disclaimer or an adverse opinion. Any modification in a report is highlighted, and then comes the basis for opinion, and the auditor responsibility is now a more detailed one. So you have management responsibility and auditor's responsibility also. So all this is what we have to deal with.
Sir,
Now,
just to interpret for a minute here, just to interpret,
yeah, sure.
Interrupt for a minute, I'm going to launch a second poll for all participants. So this is the second poll. I request all of you to please give your feedback. And if you have any questions, please use your questions. There is a pane on question. So you can write all your questions there. At the end of the session, definitely we will take care of all the questions. So please do use the questions. Any questions which pertains to auditing standards, we have expert faculty with us. So please write down questions and then we'll take care. Just more few seconds. The last 4 seconds, please. If you have not voted, please vote last 1 second. Yeah. Okay, sir, over to you, please.
Yeah, fine. Okay. So I have to minimize my this thing also, right? Okay. So form an opinion whether financial statements are prepared in all material respects. What we say in that, in accordance with the applicable financial reporting framework. First is that are prepared as per financial reporting framework, including qualitative aspect of entities accounting policy and possible bias in management judgment. So it should be prepared as per the reporting framework. So if our reporting framework is a Companies Act, then it is a Companies Act. If it is under SEBI LODR, if we are reporting, then SEBI LODR. Whatever is the framework that, or in our case, is accounting standards, then that is the accounting standards, or your say if you are following IFRS or Ind AS, whatever it is. So that applicable financial reporting framework is important. Has to conclude that he has obtained reasonable assurance about whether the financial statements are free from material misstatement due to fraud or error. See, any audit, any reader, any stakeholder needs to know that is there any material misstatement. Now, this is a jargon. We will discuss later what do we exactly mean by material misstatement. So, see, entire auditing standard, if you know these few phrases, risk of material misstatements and sufficient appropriate audit evidence. So if you have sufficient appropriate audit evidence, that is also an important aspect of audit. So you have got all the series of audit standards, so you have learned these phrases. One is material misstatement, risk of material misstatement, and sufficient and appropriate audit evidence. So whether uncorrected misstatements are material individually or in aggregate in accordance with SA 450. So you have to find out that there could be a misstatement which was material but has been corrected. Then it is no longer a misstatement. So you have
Sir,
to see that
your video is paused. Please make it active. Your video is paused.
okay. I mean, this is
Video.
where,
On the top of your screen, you're in your video.
yeah, I will
There
have
is
to
photo.
then end. I will have to skip the show, I suppose.
No, you can make it play. There is a button play on your photo, not in screen, sir. Not in
Okay,
your
okay.
presentation.
On the icon. Okay.
Yeah.
Yeah, fine.
Yes. Yeah. Please.
Yeah. And requirement of the reporting framework that the accounting standards have been materially complied with. So what is our reporting framework is the accounting standard, which is also coming, flowing from the Companies Act requirement as well. So whether that has been met with, then disclose the accounting policy selected and applied and consistency and appropriate of those policies, whether depreciation policy or an inventory or a revenue recognition. All these accounting policies have been selected and applied consistency. And are they appropriate? You may have an accounting policy which may not be appropriate, which is not meeting the general accepted accounting principle or even application of standards, then you cannot, you will say that we will value all stocks at sale price, less 10% discount. So that is not an accounting policy which is permitted. So you may be applying consistently. So that would not be correct. So then to give a clean report and disclose those accounting policy, reasonable estimates are used by the management. So many places you have to use the estimate. Why say even computing deferred tax asset in case of business losses and unabsorbed depreciation, etc. You will have to future to recognize that as that estimate correct. Then estimation while working out an impairment of an asset, useful life of an asset. All these estimations are used by the management, whether they are appropriate, and all these information presented is relevant, reliable, comparable, and understandable. See, relevance is also an important aspect of any financial statement. So the information given in a financial statement is relevant. Relevant is in a sense that we may give certain information, we may give plethora of information and which has no relevance also to the financial statement which we are talking about. So that is all, and of course it has to be reliable and comparable. So it is in a format in which it is to be given so one can compare it and anybody should be able to understand. So this information relevant, reliable, comparable, understandable. See, many times, you know, even while doing audit, I find you know, your assistant will say that yes, I have understood. No, it is not that person doing must understand. It is the person who is going to use this financial statement, who is going to use this report, should be in position to understand. So always, you know, I also tell everyone that please do your work, your notes, your working paper, your documentation in a manner that any dumb person will understand and not what you understood in the matter. Unless you have taken some view, then you can say in your view, this is what has happened. But facts which you have to write, the processes which you have to follow, it has to be always as you understand. So similarly, in your report, when you want to give, you have to see that the financial statements are giving information which is relevant, reliable, comparable, and understandable. Whether disclosures are adequate to enable users to understand the effect of material transactions. Yes, you know, like related party disclosures. Now there is a standard. So whether we have followed that standard and disclose all material transactions with promoters or some related parties, subsidiaries, or maybe group companies, whether those disclosures are proper and all terminologies used is appropriate. Now this I want to say one sentence very much to you. The terminology which you use, please do not use the terminology which we colloquially use. Like clean report. This is clean I have written you is only for the purpose of your understanding and my understanding. But otherwise, it is an unmodified opinion. So I'm just giving an example, but any terminology which you use, I'm trying to tell you that when you are narrating the accounting policy or writing down the accounting policy, those accounting policies also, it is not you who are writing down, the clients are writing it down, but the accounting policy has to have, please do not become innovative. Write the language of the standard. Even FRRB suggests that you please write the language of the standard. If you take an example that many times you find that long-term investment in terms of small companies and unlisted companies where accounting standard AS 13 is applicable and long-term investments are there, then you write long-term investments are valued at cost and there is no provision made for permanent diminution in value of investment. There is nothing permanent diminution. It is other than temporary. Please understand. See, this is a small things which you have to be careful. The standard says that you have to provide for diminution in value of investment if it is other than temporary. It does not say permanent. There is quite a difference between permanent and other than temporary. So things like that. So terminology used in policies, presentation, all line items, groupings, everywhere, whatever is reflected in the financial statement needs to be appropriate. The auditor shall evaluate whether the financial statement achieve presentation to that, evaluate to overall presentation structure and content of financial statement, whether the financial statement including the related notes represent the underlying transactions and events. So all these you have to evaluate, and then whether the financial statement adequately refer to the describe applicable financial reporting framework. Now, if this is all there, then you can give a clean report. So, these you can use it as a checklist that when one can give a clean report. So, if all this is done, then you can give a clean report. Now, coming to accounting standards, I've just listed. You all know what is accounting standard. So, I'm sorry to say, but we have seen even financial statements of a company where the application of accounting standards as per accounting standard 2 of issued by the Institute of Chartered Accountants of India. Please go and check whether you have also seen this, that as far as companies are concerned, it is not that accounting standard issued by the Institute of Chartered Accountants of India. It is the accounting standards announced or pursuant to section 133 companies accounting standard rules where it applies. That is what we must clearly say. Many times you will find, you will go and check. So the institute's accounting standard will apply only to non-corporate bodies, and when you are doing audit of non-corporate bodies like entities like partnership firms, then you must ensure that accounting standards are complied with. Even for LLPs and all, accounting standards apply, because that's a corporate entity but does not have the accounting standard or the Companies Act applicable. Then Ind AS, wherever Ind AS is applicable, you have to take Ind AS. If you are doing audit under IFRS, then you have to refer to IFRS, or even public accounting standard issued for local bodies internationally or locally are those accounting standards. Why I have put this slide is just to make you amply clear that when you are doing an audit of a company, you are always referring to accounting standards as per section 133 of the Companies Act. Some issues just I have dealt with. We will come to modification later. How should an auditor frame his opinion where statute or a court order allows an entity to prepare financial statement without meeting the standard requirement or a GAAP requirement? Say, permitted to account certain type of income or expenditure on cash basis. Suppose this is a court order. Then can you say that accounting standards are not followed? Yes, accounting standards are not followed, but the court is above the requirement of the Companies Act, because that's the court order, and therefore you cannot modify an opinion, but you may bring about an emphasis of matter. In fact, in one reference to Ind AS, where there was an issue of appointed date and effective date, where institutes ITFG also has come up with one ITFG where they have given that if there is a court order, then one need to go by the court order. However, they have said they have to apply applicable auditing standards as well. So possibly one would take a view that emphasis of matter may have to be mentioned. I think this emphasis of matter, when we discuss, you will get relevance of this slide. Then how should the auditor opinion be expressed if the financial statement are prepared in accordance with two financial reporting frameworks? Sometimes suppose you have to give a report under two separate financial reporting framework. Then how do you deal with it? So the auditor may issue two separate reports, because it may possible the financial statement give a true and fair view in accordance with accounting principles generally accepted in India and with IFRS. But it is always better to give two separate reports, and you can't give one report. And it is possible that in one framework you are compliant, and in another framework one is not compliant. Then how do you deal with it? So it's better to give two separate reports. So this is about SA7. This was all about SA700. Now we move to SA705. Of course, I have not dealt with auditor's responsibility, management responsibility, etc., because we have applied it, and only to very great extent auditors' responsibility have increased. The explanation as to the auditor's responsibility, which of course you have drafts available in the standard, and there is one very good publication of the institute on this reporting standard, which is implementation guide for SA 700, 705 and 706. There is a separate booklet available of implementation guide of SA 701, and there is a separate implementation guide for SA 720. If you go through these publications, they are very good publication, very comprehensive publication, which do give the illustrations also. So please do that, refer to that in case of about auditor's responsibility, etc., because otherwise this presentation would have become further bulky. Deals with audit reports where a modification to the auditor's opinion is necessary. So 705 deals with modification. Now, so new terminology after SA 700 revised came, we learned a new terminology called modification. Generally, as I said, we always use qualification. Is audit report qualified? But now they've said modification. So whenever you are even talking, then you must ask whether is the audit report modified. Now, what could be a modified? It could be a qualification, it could be an adverse opinion, or it could be a disclaimer. So this you friends must know that modification goes into three parts, and that's very important. The decision on the type of opinion depends on the nature of the matter giving rise to the modification, whether financial statements are materially misstated, inability to obtain sufficient and appropriate audit evidence, an auditor's judgment about pervasiveness of the effects of the or possible effects of the matter. So this pervasive word also is very important, which you all ought to learn and know and understand. So depending upon the nature, is there a material misstatement? Is there is you are unable to obtain sufficient and appropriate evidence, how pervasive it is. Based on that, one will move and decide whether it is a qualification, adverse, or disclaimer. Modified opinion is necessary when the auditor concludes based on the audit evidence obtained that the financial statement as a whole are not free from material misstatement. So if they are not free from material misstatement, means it has a material misstatement, or you are not able to obtain a sufficient appropriate evidence, then you need to modify. Now, therefore, I am now discussing what is material misstatement. A misstatement is the difference between the amount of classification, presentation, or disclosure reported in the financial statement. I'm giving an example of, say, we have reflected, say, loan given, which is in the which is a short-term loan, current loan given, and you are reflecting it as non-current, then that is a classification error. So misstatement into classification. Now you would say how material it is. Yes, you will have to then see is the material misstatement. So you are always looking of risk of material mistake. So is the difference between the amount of classification, presentation, or disclosure reported in the financial statement and classification, presentation, or disclosure required as per applicable financial reporting framework. So the amount, so material is the difference between the amount of classification and the classification disclosure required. So what is required and what is disclosed and what is the difference is what we are looking at. This is the important material misstatement. Appropriateness of the selected accounting policy. Selected accounting policy are not consistent. Financial statement, including notes thereon, do not represent underlying transactions and events that achieve the fair presentation. Application of selected accounting policies are not applied consistently. So if you are in 1 year you are following straight line method, next year you feel that written down value method of depreciation is convenient to you, so you switch it over to written down value, and third year again you come back to straight line method of depreciation, then that is not the accounting policy which are you consistently following. So these all will lead to material misstatement. For example, even for stock, which you are to value stock at cost or net realizable value, whichever is lower. And in a COVID scenario, it is possible that some of the stock net realizable value could have been lower. Now, the question may arise, which you might have discussed on audits also, that how are you looking at that net realizable value? When are you looking at that net realizable value? Take a good example of say if you were supplying cheese to a Pizza Hut, and you were supplier of a cheese, and on 24th of March it was announced that the lockdown was announced, and all pizza joints were closed, and you were supplying cheese to pizza joints. You had, say, stock which could last for 20 days. Now on 31st of March, what is the value of that stock? On 31st of March, possibly that stock you will not be able to sell, because all hotels are closed, all pizzas joints are closed, so you may not be able to sell that. That is the day the net realizable value was probably zero. So one has to analyze that when was that net realizable value had gone down. because at least on 24th of March till 14th April, if your cheese was to last beyond 14th April, for sure you would take it as zero, because you could not have sold it. Sorry, if it was beyond 14th of April, you could have at least sold it, because on 31st March, the lockdown was supposed to be up to 14th of April. But it was to expire before 14th of April, then you couldn't have taken any value thereof. So, of course, these are very, very minute details which one has to look at the facts and decide what was your net realizable value. We were looking at an audit where, the company had work in progress. Now, work in process stops. If you are in a chemical company, if a work in process stops, what happens to what was in work in process? That will not be used. In 9 out of 10 cases, it will not be usable. And therefore, on 31st of March, that value could be zero. Of course, so this is how one will have to look at it, that whether the valuation of stock also will lead to material misstatement. Is the policy followed is correct? So appropriateness or adequacy of disclosure in the financial statements. Financial statements do not include all disclosure required by the applicable financial framework. Disclosure are not presented in accordance. All this we have discussed. So inability to obtain sufficient appropriate evidence. This also we must understand. So auditors' inability to obtain sufficient appropriate audit evidence may arise from circumstances beyond the control of the entity, where records have been destroyed by fire or seizure by government authority. Now, you could not verify the stock at the year end. All these scenario, whether you have you had a control or beyond your control, and you could get a sufficient appropriate audit evidence, please understand that you must satisfy yourself from all the circumstances which you are sitting that exist in case of a stock existence and condition, or for purchases all documents are available, or for purchases of fixed assets all related documents are available, so on and so forth. So all audit evidence, I think in your series there must be a this audit evidence dealt with. Then circumstances relating to nature or timing of the audit work, when the auditor is appointed on such date that he cannot observe the physical count. Limitation imposed by management. If management has imposed some limitations, then all these may lead for you to say that inability to obtain sufficient appropriate evidence. Then in case of limitation is imposed by management, the auditor shall request the management to remove the limitation. If the management still persists, auditor shall communicate with those charged with governance, that is audit committee in main case. If the auditor is unable to obtain sufficient appropriate, he shall resign. No, I think this resignation point we should not be dealing with. Sorry, I think this slide I should remove. Okay. Then qualified opinion, the auditor shall express qualified opinion when the auditor concludes that misstatement individually or in aggregate are material but not pervasive. Please remember, now we are going to the three types of modified opinion. One is qualified opinion. When the auditor concludes that misstatements are individually or in aggregate are material but not pervasive. The auditor is unable to obtain sufficient appropriate audit evidence, but also concludes that possible effects of undetected misstatement could be material but not pervasive. Please understand, concludes that misstatement individually in aggregate are material but not pervasive. Now you will say, what is material and what is the difference between material and pervasive? So we will deal with this once we go forward, but first we understand what is qualified opinion and adverse opinion. The auditor shall have, so first is material and not pervasive. Now auditor shall express an adverse opinion when the auditor, having obtained sufficient appropriate audit evidence, conclude that misstatement individually or in aggregate are both material and pervasive. So far we were dealing with material and not pervasive. Now we are dealing with material and pervasive. So then you give an adverse opinion. Now adverse opinion means you are saying accounts are not true and fair. That is an adverse opinion. And then disclaimer of opinion: when the auditor is unable to obtain sufficient appropriate evidence and concludes that possible effect on the financial statement of both undetected misstatement, if any, could be both material and pervasive, and in rare circumstances having obtained sufficient appropriate, but due to multiple uncertainty, auditor is not able to form an opinion. If you are not able to form an opinion also, then you will say that it is a disclaimer of an opinion. This matrix, friends, please just understand, read. When I just charge my laptop meanwhile, put it on charge at least. So this is the key thing which we all have to know. So when do you qualify? So when financial statements are materially misstated and but not pervasive, then it is a qualified opinion. If you do not obtain a sufficient appropriate audit evidence, they are material but not pervasive, then it is qualified. And financial statement is materially misstated and it is pervasive, then it's an adverse opinion. And financial, if you are not able to obtain sufficient appropriate evidence and which is material and pervasive, then it is disclaimer of an opinion. So this matrix is says it all. Now, what do you mean by material? I mean, what do you mean by pervasive? Now, suppose you have a, I'm just giving an example which is not related to this, is you have a headache. And then you say that somebody asks you, how are you? Then you may say, fine, but I have a headache. But that is fair enough. But suppose you have a headache, you have some, backache, you have stomachache, you are running nose, you have fever, you have all sorts of things. Then you say, I am fine, but I have a headache, I have a stomachache, I have even backache, I have running nose, I have. Then it becomes material and pervasive. Friends, I think this would explain how do we distinguish between material and pervasive. Pervasive means all pervasive. In all respect, you are into difficulties. And I've taken that example from the standard itself, how it does talk about pervasive. The effect of a material misstatement, possible misstatement, is pervasive when it pertains to amount in the financial statement and it is not confined to specific component, accounts or item of financial statement. If it is so confined, it represents or could represent substantial portion of financial statements. So suppose if only stock is not valued at net realizable value and it is still material, then you will just qualify. But the stock is valued at NRV, you have not made a provision for doubtful debts, you have not provided depreciation as per accounting standard, I mean the requirement as per the Companies Act, still you can not say A, B, C, D, E, F, G. Subject to the above, accounts are true and fair. You can just say, I have a headache, but I am fine. But I have a headache, I have a stomachache, I have a back pain, I have this, I have that. You cannot say, but I am fine. I hope these makes clear that what is pervasive, and for you to distinguish between qualification and then between adverse and disclaimer. So disclaimer will come is a pervasiveness, material and pervasiveness as to obtaining sufficient appropriate evidence. Then it is a disclaimer, and adverse comes when it is material and pervasiveness for material misstatement. I hope this is clear. So where opinion is modified, the paragraph is titled as qualified opinion. So now it is amply clear that as a you have to, if you are qualifying, you have to say that it is a modified opinion, but you will just straight away say qualified opinion or an adverse opinion or the disclaimer of opinion, as the case may be. So in case of qualified opinion due to material misstatement, the auditor said, except for the effects of the matter described on the basis of qualified opinion, the financial statement have been prepared in all material respect and in accordance with the framework, etc. Then when the modification arises from inability to obtain sufficient appropriate evidence, you will say the auditor shall use phrase except. So you will use except in the opinion paragraph. When the auditor expresses an adverse opinion, he says because of the significance of the matter described in the basis of adverse opinion, the financial statements have not been prepared. Please see, in earlier you are saying the financial statement have been prepared in all material respect, and here you will say have not been prepared in all material respect in accordance with the applicable financial reporting framework when reporting is in accordance with the compliance framework. So, and then you will have a basis for a qualified opinion. And so if you have qualified opinion, you will have another para called basis for qualified opinion. Then you will have if you have an adverse opinion, you will say basis for adverse opinion. If you have a disclaimer of opinion, then you will say basis for disclaimer of opinion. It will be placed after the opinion paragraph. Obviously, it is called opinion section only. The auditor shall conclude in this paragraph a description and quantification of financial effects of the misstatement unless impracticable. So you have to quantify and give a proper description also. So now stating of inventories at cost or not at the lower of cost and NRV. I have just discussed and describe also how the qualified opinion can come and how the basis of qualified opinion can be given. This is part of implementation guide. One can read it also, and when these slides are shared, you can have a look at it. But we have discussed this point, so I will then move ahead. Adverse opinion also, company has not consolidated financial statement of subsidiary. Suppose if there is a subsidiary which is material and all assets and liabilities are not incorporated, then you may have to give an adverse opinion on the financial statements. Next question is the fire took place and excise records for the period were not available for verification. Due to restriction mentioned on the basis of opinion paragraph, auditors would not be able to form an opinion on the financial statement. So you have a disclaimer of opinion. So what we just discussed, I have just given one example. And as I explained that pervasiveness, you must be very, very clear about pervasiveness. I have a headache, but I am fine. But I have X, Y, Z, A, B, C of illness, but I am fine. That's where the issue is. So basis for disclaimer of opinion, we have then earlier was the disclaimer and then the basis of disclaimer of opinion. So auditor's responsibility paragraph, I have just given that when you are qualified or you are modifying your opinion, then you will have to state that audit evidence obtained is sufficient and appropriate to provide a basis for the auditor's modified opinion. So whenever there is a qualification or adverse opinion, you will have to mention about the appropriateness of the evidence. Similarly, in case of a disclaimer also, you will have to mention that we have not been able to obtain sufficient appropriate audit evidence. So when you are, this is why I have given is when you have standard format of audit report and then you have qualified, please remember that auditor's responsibility paragraph to this extent needs to be changed. So yeah, so this is what is like revision in SS 705. The only change is that basis of qualified opinion and the basis of adverse opinion and basis of disclaimer will follow opinion paragraph. Earlier it was basis coming first and the opinion coming later. Now you have opinion coming first and then the basis, and opinion and basis both are coming at the top rather than which was coming at much later point of time. There are no other changes. The management imposes a scope limitation after the auditor has accepted. What should we do? The auditors the auditor shall request the management to remove the limitation and discuss with those charged with governance. There is a misstatement or a series of misstatements in the financial statement that the auditor evaluates as material and pervasive. The auditor explains each misstatement in separate paragraph in his report and then state his opinion that's subject to. We just discussed that you can't list 10 items and then say that, okay, subject to these accounts are true and fair or financial statements are true and fair. What is an auditor obliged to do if he expects to modify his report? His obligation is to communicate with those charged with governance. Generally, those charged with governance is the audit committee in case of companies or board of directors, or in case of a proprietary concern is there or a partnership concern is there, where generally the all the governance and the execution is with the same persons, then you discuss with those same persons. I go to emphasis of matter paragraph. How much time do I have? Hello? Am I audible? Hello?
Yes, audible. Please go ahead.
Yeah, am I audible? I was just wondering. So I have some time,
Yeah,
isn't
yes.
it? No? Yeah. Half an hour?
Yeah, we have 20 minutes.
Okay, I'll have to rush it then. Form the emphasis of matter paragraph, matters that are already appropriately presented or disclosed in the financial statement. A paragraph included in the auditor's report that refers to a matter appropriately presented or disclosed in the financial statement that in the auditor's judgment is of such importance that it is fundamental to users' understanding of the financial statement. The whole idea is that you may have to give certain information to the readers, which has nothing to do with modification of an opinion. It is just an important matter which you want to bring it to the notice of the stakeholders or the readers of the financial statement, and that comes by way of emphasis of matter. So it is useful having formed an opinion intends to draw the attention of the users. So it is not an attention drawing note which we had we were just doing it. It is in the same form as what we used to call it as attention drawing note. But with an attention drawing note, you are not saying it is subjective. It is just read with kind of thing, which we were earlier doing, which will now coming into emphasis matter of paragraph. But please note that this EOM is not a substitute for qualification, which I want to make it amply clear. Suppose an accounting standard is not followed, then you say that by way of emphasis of matter, that company is of the view that this accounting standard in a COVID scenario cannot be followed. You cannot just do away with an emphasis of matter. You will have to qualify. So this kind of distinction one will have to make. So an emphasis of matter paragraph is useful when the auditor, having formed an opinion, intends to draw attention to the users a matter through appropriately presented and disclosed any other matter relevant to the user's understanding, where an emphasis of matter paragraph is required by any other auditing standard, the disclosure shall be as per that standard. That is fine. Such a paragraph shall refer to information presented and disclosed in the financial statement. The auditor should have obtained sufficient appropriate audit evidence that the matter is not materially misstated. So these two are, when you, if material is misstated, or if you have not obtained sufficiently appropriate evidence, you can't just deal with EOM. You will have to qualify. Insertion of an emphasis of matter paragraph in the auditor's report does not make the opinion modified. Please understand 705 and 706. 705 deals with modification, as you understand as qualification. Modification means, I repeat, qualification, adverse disclaimer. EOM, emphasis of matter, has nothing to do with modification. Is not a substitute, which we discuss, and that is very, very emphatic, that people may use this EOM as a substitute for qualification, and that can never be done. An emphasis of matter is not a part of audit opinion at all. It is a separate independent paragraph described to provide additional communication. So it is not a part of audit opinion. So after opinion section only it is placed. So the emphasis of matter paragraph shall be placed immediately after basis of opinion. Opinion, basis of opinion paragraph, and then your emphasis of matter paragraph include a clear reference to the matter being emphasized and to the relevant disclosure. And also it indicates that opinion is not modified by using word like without qualifying our opinion, or our report is not qualified on this matter. So in short, similarly, excepting for the reporting of going concern paragraph separately in a paragraph titled materially uncertainty relating to going concern. Earlier, even going concern related matter was going under EOM. Now under SF 570 is revised, and as per SF 570, which is revised, you have to give a addition separate paragraph on material uncertainty relating to going concern. And that is the change of this SS 706 than previous one. The other reporting emphasis of matter and other matter or other legal matter paragraph are substantially the same, except that there are some rules followed relating to key audit matters. Example of circumstances, that is where we come that an uncertainty relating to future outcome of an exceptional litigation or regulatory action. Then if you are not able to judge about that future outcome, then you may emphasize, you may have probably disclosed as contingent liability, you may have provided for if it is required, but you still may have applied an emphasis of matter on that. Then early application of new accounting standard, that is a pervasive effect on the financial statement in advance of its effective date. Suppose if a standard is coming into play from 1/4/20 and you have applied for even 19/20, and it has a material it has a substantial significant impact on the financial statement, then you may And of course, the standard was permitting you to do that. Then you may bring it into that. So there could be hundreds of examples where people could have used emphasis of matter. We will see that when the COVID slides comes, that how people have used this emphasis of matter. Which company has disputed in the matter that are various stages of litigation pending resolution of this dispute by these expenses have been accounted for financial statement based on the management expectation or opinion. So even this is provided, yet this being a significant amount of the financial statement, it has been brought as an EOM. You can see lots of examples. Now, I have given few examples. I will read one which is marked here. We draw attention to the fact that responses were not received from so many number of cases out of total sample of confirmations, and other details in respect of parties reflected under sundry debtors so and so. Further confirmation could not be sent to so and so parties. And addresses relating to this. Had all these confirmation been received and reconciled, there may have been additional adjustments required to these financial statements which are not determinable brought about. Now, see, this is typical of your COVID scenario. Today, you may not have been in position to send your confirmations, or having sent the confirmations also, the responses have not been there. Now, you may put an emphasis of matter, or if you have applied an alternative procedures like cut-off documents or scrutiny or subsequent payments or subsequent receipt, which is also permitted by standards on auditing, then you can maybe give a key audit matter. Need not give an emphasis of matter. In key audit matter, if alternative procedure is applied and you feel that this is a material item on your balance sheet for the confirmations, then you may bring it by way of audit confirmations. I mean by key audit matters. So issued to be considered under COVID situation: improper accounting or inadequate disclosures, inability to obtain sufficient appropriate audit evidence, inability to complete audit procedures, going concern, including emphasis of matter paragraph in audit report, inclusive of information and other. So in a COVID scenario, your major challenges is, of course, the institute has come up with all the guidance note. I request everyone to read all the key audit considerations amid COVID series which institute has come up with. There is a series on reporting. There is a series on physical verification. There is one publication on subsequent events and one publication on going concern. Now, all these were, apart from that March advisory on accounting and auditing. Now, if you deal with these documents, you read these documents, then you will have full idea that how do we deal with. In fact, you will have a full grip over audit standards if you go through all these publications. Some people have given modifications or EOM, just presentation where, HDFC Bank, Adani Power, Axis Bank, Bajaj Auto, all these have given an EOM, and mainly in case of banks and all, for their provisioning, there is an EOM. And some have not given anything. Other matters paragraph, I think nothing much in that. We can just skip, so we can spend about 5-10 minutes, 10 minutes on key audit matter, and then time permitting, I'll come back to this COVID-related publication of the institute. So CAM also, I would like to explain that communicating key audit matters in the independence auditors report. Here I have used Manish's presentation. Sorry, I did not have time to deal with it. So application for audits of complete set of general purpose financial statement accordingly. So it is applicable for general purpose financial statement and complete set of financial statement. And it is mandatorily applicable in case of listed entities, as I discussed. Also applicable of audits of unlisted entities in following situation where the auditor is required by law or regulation to communicate CAM. Today there is none. Where auditor decides to communicate CAM voluntarily. This is what I was saying. That today in a COVID scenario, this is my view. Everyone may not agree. Today, in a COVID scenario, you are not able to carry out a physical verification of stock, but you have adopted an alternative audit procedure. And if you go through the guidance of if the stock is a material item and you are not able to be present at the time of verification, if the company has taken the verification or a company has not taken verification, depending upon the circumstances, whether you could use internal auditors assistant for the verification, or you could appoint another chartered accountant to verify, or you could verify the stock, though subsequently through video conferences, calls, etc. So if alternative audit procedure, then if it's significant audit aspect of the entire audit which you have done for 1920, then we can probably use that CAM in case of even unlisted company. This is my view. Everybody is free to take their own view on the matter. Those matters that auditors' professional judgment were most of significance in audit of financial statement of the current period, CAM are selected from the matters communicated with those charged with governance. Now, one important thing which you must know, that CAM have to be communicated with those charged with governance. If you all are aware that in case of a listed companies, in every quarterly reporting, auditors at the audit committee give a presentation and brings out main issues also, how those issues were resolved, and how exactly the audit processes were followed, and whether they could be considered as key audit matters or not, are also intimated to those charged with governance. So this is how key audit matters are dealt with. It ought to be communicated with those charged with governance. So this is what exactly the pyramid which you must know. It is responsibility of an auditor to communicate key audit matters in the audit report. Matters of most significance in auditor's professional judgment and purpose to enhance the communicative value of the auditor's report by providing greater transparency about the audit performed. So please understand that it has to only do with your audit processes. It has nothing to do with the financial statements. Of course, it is in relation to the financial statement, but it is nothing to do with material misstatement, or it has nothing to do with not obtaining a sufficient appropriate audit evidence. Like in case of EOM also. EOM is drawing an attention to an item on the financial statements, whereas key audit matter is how exactly the audit processes were carried out in the given circumstances. So applicable for accounting period from 18 for the audit report issued, the matters that were communicated with those charged with governance. So see how the pyramid works. Matters of most significance in audit. So you may report 10 matters to those charged with governance. Matters that are significant, required auditor's attention could be only 6. Then matters of most significance in audit out of 6 could also be only 2. So this is how the one has to deal with key audit matters. It is not that all are key audit matters. Matter that required significant auditor's attention, factors to be considered, area of high risk of material misstatement assessed or significant risk identified. I'm repeating, it is area of the higher risk material misstatement assessed and risk identified. It does not say that there is a material misstatement. Please, I'm repeating this. Effect of significant events on audit, significant auditor judgment relating to areas that involve significant management judgment. So whatever is significant needs to be taken. Matters of most significance in audit, factors to consider, nature and extent of communication, importance of matter, nature of underlying accounting policies, nature of materiality, extent of audit efforts, severity of difficulties. We will just go to the main area. Subheading CAM, the auditor shall describe each CAM with reference to the related disclosure in financial statement and explain why the matter was considered to be one of more significant, how the matter was addressed in the audit. So generally CAM is given in 2 parts. One is you describe what is the CAM, what is the matter, and then you say how exactly you have dealt with. Let us take an example CAM which is generally also can be used in a computation of deferred tax. Suppose if for unabsorbed depreciation and business losses, or for met credit which you have, where met credit entitlement under AS and deferred tax asset, it is known as deferred tax asset. It is considered as deferred tax asset under Ind AS scenario. Now, if one has recognized deferred tax assets on this count, then one may bring it that what audit processes were followed to accept this deferred tax asset as that there will be a future taxable profits available to set off all this. So maybe you have obtained the projections, you have had a discussion with the management, you have evaluated their projections, and based on that, management has come to a view that deferred tax asset has to be recognized, and you have followed your audit process to say that deferred tax assets have been recognized. So order of presentation of CAM, relative importance of CAM based on auditor's judgment. So which order, if you have 6 CAM, which one to use is of course based on matter of importance one should be dealt with. Of course, there is no ceiling for CAM. Then adequacy of description of CAM is a matter of
There is some issues, I think, in internet connectivity. Let me just talk with faculty. I will get back to you all of you. Just a minute. Yeah. Till he joins, I'm launching a third poll for all of you. Please be there for a couple of minutes more. I'm launching a third poll for all of you. Please give your feedback. What should be the frequency of auditing standard series? Whether you want this series to be done every 6 monthly, or after a year, or 2 to 3 years. So what you expect, what you want this series to be done, either 6 monthly, half yearly, every yearly, or more than 2 to 3 years. What is your opinion? Please give me. Till that time, I will talk with faculty and I will get back. Ending the poll. Remaining, please vote. Okay. So if you look at the result, I think around 48% wants 6 months, 48% wants annually, and 4% wants 2 to 3 years. So there is a quite range where 48% of the participants want to be done every 6 monthly, and other 48% wants annually. So at least from 6 months to 1 year, it should be. Yeah, Paresh, you are back.
I'm very sorry. Just
Please switch on your video.
using 2 GOs. Is it now?
Yeah, please switch on your video.
Why is it saying verifying ID? My video is on. You are doing quiz right now. One step.
Not sure. We can start. I think just last 4 minutes is pending. We can start now.
Yeah.
Your screen is visible.
My presentation
you
is
can
visible.
play your presentation.
Yeah.
Your presentation is right now we can
Yes.
see only the connected. Yeah, right now we can see only connected to GoToWebinar. We can't see your presentation, but your screen is visible.
I'm showing the screen, so you will have to share the screen again, I think.
Sorry?
But you will have to share the screen again, I think.
Your screen is visible to us.
Screen is visible?
Yes.
My
Now your
presentation?
video is, you are visible now.
And presentation?
Your screen right now is good. There is no presentation I see. GoToWebinar is your screen. What you can see.
Yeah, but GoToWebinar I can see. Okay, I'll speak so that so Canvas is modified only. Okay. There's echo going. Share webcam. Shared my webcam. Oh. Internal speakers.
Just wait for a couple of minutes. I understand that it's like a little late also, but however, let us wait for a couple of minutes. Till that time, let me just go through questions which we are having. I think one question which was asked was with respect to. Yep, Parishbhai, you are back.
Tell me what was the question. Going.
I think you have some internet issues. You can just try to see your internet again.
Yeah, but then there is an echo.
You may have two devices on. That's an echo. You may have a phone and computer. Both devices may be on. That is the reason why there's echo. You can switch off one of the devices.
No, my phone is not on with the. Okay, just wait. Okay. Is there an echo coming still?
No, I think now it's better.
So can one modify the
No, I think
auditor
the voice
should
is
not
still not coming
communicate the
right.
matter as.
I think it is not audible correctly.
What I do is, Chetan, what I do is give you a phone. I'll speak to you on the phone. Just put up your speakers.
I'm not able to get you. Can you write down the chat? I think you're on the last slide. So just a minute.
Speak from your phone, and from your phone you.
Yes, I think what we have done, the participant, just for the benefit, that I have kept my speakerphone on. Paresh Bhai is on the phone, and you are able to hear it. So, Paresh, now please go on.
Yeah. A second. Yeah.
Paresh, you need to mute yourself.
Will have to mute me. Yeah. So, modified opinion. Okay.
Yeah, Paresh Bhai, hello. See, basically, I'm keeping it one. You're actually open to one. So I'm with this.
I थिंक નીચેથી કસેથી આખામાં બધે ઇકો પડે.
Yeah, actually you're logging into two devices. I can see two devices from you. See Paresh Clark, there are two Paresh Clark right now, so you're logging for two devices. That's why there's echo. Not an issue. Now go on. Let us go ahead now.
Okay. So sorry, extremely sorry. तो एक ने म्यूट करी दो ने. Yeah. Now am I audible? Yes, sir. Code is coming. Yes, sir. Code is coming. Yes, sir. Just leaving. Okay. Is it fine now? Hello. Hello.
Ha, Paresh, please go on.
Okay, fine. I think this got messed up. Okay, so now you have this. You can see the screen also. No?
No, your screen is not visible.
So audit. Oh God. Okay, fine. I just discussed. So we cannot complicate matter of CAM as modification. I mean, so modification is separate. You can't substitute one for the other. So CAM is, as I said, it is audit process which we are talking about, and modification is the audit report which we are talking about. So it is possible that you may have given a qualification also, and for that matter, you item you have even given CAM. But EOM or OM para cannot use as a substitute for CAM also. So it is vice versa that CAM, as I said and repeat, that it is an audit process which you must be very careful about. See what kind of CAM has been given: assets impairment. Then many have given regarding revenue, allowance for doubtful debts, where CAM is given, because that is where the estimation. So wherever the significant estimation from the management have to be done, then CAM is reported. Goodwill impairment, even internationally also, goodwill impairment is the max number of cases where they have been given. In fact, Bombay Chartered Accountants Society has come up with a publication which is a compilation of CAM by various companies in 2018-19. Comprehensive compilation is there. Then taxation, as I said, deferred tax, maybe for investment, valuation of investments, there also possibly a CAM would have been there. Fair valuation in case of equity instrument which are unquoted, what processes are applied, where CAM could come into picture. So there are certain questions which are there. We could try and understand. Yes, unlisted company, it is of course not mandatory, but I gave you my suggestion on that. Does it apply to audit of interim financial statement? Answer is no, it does not apply on your quarterly reporting. It is applicable for audit reports provided for tax financial statements. Answer is no. So is apply entity which are in process of getting listed. Yes, answer is yes. Is auditor required to communicate key audit matters if company security on foreign stock exchange but has no listing in India? I don't think so, because it is only if it is listed in India. When an auditor disclaims his opinion on the financial statement, communication of key audit matter, yes, if you disclaim also, you can give a key audit matter for that disclaimer. But what will happen is that what audit process you could have followed. So then there could be a challenge to give a CAM when you are already disclaiming that you have not got sufficient appropriate audit evidence. So if you have not got a sufficient appropriate evidence, there could be much challenge to give a CAM on that item of disclaimer. Possibly no, or maybe one can, I'm not able to think on these lines, but one can say, okay, why you have disclaimed, the reasons you have already given, okay, you have not got sufficient appropriate evidence. But in key audit matter, possibly you give an idea that why do you say that sufficient appropriate evidence was not made available to you. Possibly, but I need these questions to can key audit matter be different for different years? Yes, answer is yes. So there are quite a few questions on key audit matters which one can answer. Now, what I have not dealt with is SS720. SS720, you know, has been in there for last many years. But SA720, which was revised from 1st April 2018, I only need to share with you one two important aspect of it, that in so far we were expected to see that what is written in the board's report is not in variance with what is there in financial statement. What is written in financial statement and what are commentaries given in the board's report, and not only board's report, entire annual report is not in variance. I mean, there is nothing which is materially different than what is there in the financial statement. So whenever we are doing our audit, we are signing our audit, we ought to have the board's report with us, and at least practically the draft board report should be available with us when we give our draft audit report. And it is not only board report. If there is management discussion analysis, or if there are others which has been given, all these points which have been given in the audit report, all this information given in the annual report, which we need to check and say that there is no material there is no material misstatement in that report than in the financial statement. And suppose if you haven't got that, then you say that you have not got those information at the time of your audit report. This is there, and therefore I must request all of you that you prepare your clients to be even ready simultaneously with financial statement, their board report and the like. So this is about 720. I've not been able to go into the detail of that, but this is what comes as a separate paragraph. If you read your audit report as a separate paragraph under SA700, as under other information, that other information in the annual report are not, or I would put it other way around, are in sync with financial statement, and there is nothing materially different than what is in the statement. So with this, friends, sorry for all this mess up on connectivity.
No, sir, this is okay. I understand, sir. Don't worry. This is okay, and we are thankful to you for your sharing your valuable time, because these internet We have been like using internet so big, large since last couple of months, which was not the case earlier. But around 95 or 98% of the time, you have been given utmost all your experience, very critical, and with the help of the case study. I think the most important thing is that when you explain the case study, it really gives a lot of very good to us. Now, a few things I would like to share in addition to what Sir has told. I think first thing, I always believe that the most important thing in the whole financial statements, if you want, the most important thing in financial statement is our audit report. How much time we spend on audit report and how much time we spend on the notes on accounts or financial statement as per schedule 3. But what is needed is, for me, first thing is that please give importance to audit report. Even auditee doesn't give the importance to audit report. Why? Because we don't give importance to the audit report. What is needed is that we need to discuss with the client on the qualification. We need to discuss with the client on emphasis matter. Now, when it's possible only when we know and understand actually at what point of time we have to give emphasis matter, when we have to give qualified audit report, when we have to give auditor's opinion, what to be provided in the key audit matters. So I think the most critical aspect, what I believe as a challenging task and as we all should do, is that first we need to give the most important priority to the audit report. Financial statements, one of the most important thing, if something can help you, is audit report. What is written in notes on account is what is done by management. Now, if something is not right, compliance with AS is not there, compliance with SA is not there, anything, our comments, if not there in audit report, we have not done our duty. So most important, please give the priority importance to audit report. Whatever we do at the end, we should have the system and process to discuss with the auditee, discuss with the client about the audit report. They should understand this is the value document. They should understand it's not something which we have to just sign. It is not available as just to be signed. It is something which we have to discuss, even if you don't qualify. But please discuss the point that if you don't do that, I have to qualify that. Kindly ensure that this is to be done in the next year. So I think we should start giving importance to audit report. Along with us, we should also discuss with the client, so client also give importance to audit report. And then over the period, I think the level of quality and level of awareness will come into picture. And Paresh bhai, there are a few questions. If we can just quickly take your questions, I think if somebody's already there.
Mr. Chetan, I would like to add that if you do Caro last minute, lot of points come up that way. So please, when you start your audit itself, you start Caro. And now with new Caro, you have no choice but to start along with audit. Give a priority to Caro in a very, very significant manner. Yeah,
exactly.
Please.
Sir, one question which Mayur Muda has asked, he's already there, so we'll take the question. His question is that in case of bank branch audit, while auditor's report is addressed to central statutory auditors, please give idea about key audit matter and material level should be considered by branch auditor, while the bank planning material level considered by all the firms of central statutory auditor of the bank is 85 crore rupees. So he's asking a question that if he's a bank branch auditor, then what should be his key audit matter and material level as far as branch auditor is concerned?
Okay, but at the outset, let me tell you that I don't handle bank audits or bank branch audits for that matter, but audit per se, in case of a bank branch audits, when you do, your main focus is on the documents of those lendings. Isn't it? So your focus area of audit also would be all what you call is advances. So for advances, your review could become a key audit matter if there is some estimations have been accepted or some reporting have been accepted, which, is based on some estimation, and you taken some judgments on that.
Yes, Mayur, if I can
Otherwise,
share my experience of bank batch audit, what we can do, you can add the point of RBI classification, because on March year ended, RBI has issued a circular wherein they give moratorium period. So there are a lot of things. So you can talk about that particular thing about RBI moratorium, which was there on 23rd March onwards. So that can be one point in key audit matters. Second, you can also mention about the advances, large advances, as Parish Bhai sir has mentioned. That also can be mentioned here. And material level should be relevant to the branch, not at the central level. So material level at the branch should be based on the branch. I think the branch advances, branch deposits, and thereafter material level should be identified. Taking next question, sir. There is a question
yeah,
from Gaurav Seth, who's who is already there here. His question is that what alternative audit procedures should be conducted for inventory verification in times of lockdown to comply with SA requirement?
yeah, that is what I'm saying. SFI 500 and 501 deals with it, and the institute publication specifically is on this subject itself. Key audit consideration made forward for physical verification of inventories, where they have said that there could be two scenarios where auditee has not carried out physical verification, or auditee has carried out physical verification, but you could not remain present on either situation. It is possible that physical verification conducted subsequent to the balance sheet date, that is after 31st of March. In rare cases, it could have been done before 31st of March. Then you do roll forward procedure if it was done before 31st of March. You could have you could appoint a chartered accountant who is locally placed to do the stock verification. That is a possibility. He can physically go, the company's team can be there in a physical verification, and you can obtain an audit report there from. Second way is that you could go and do a video call. And then then when they are doing the stock verification, you could be available on video, and they will show you the inventory line and the physical check which you are doing, and possibly you can ask them, because you may have done the stock in the past of the same client, and you may have that where these stocks are there, what are the places where stocks are available. You can ask them to go and see that, okay, stock is there at that place, or you can give them an identify, okay, I want to stock in that box, or this bin rack, or another place, and things like that. So there could be a video conferencing call can happen. Yeah, a challenge which we even we could face, that in a chemical plant, it is possible, it is not possible to take the video. You can't take your mobile in a chemical plant. Then there could be a challenge. Of course, then you will have to find another alternative. Suppose internal auditor has done the audit stocks, then you can rely upon that. And then, of course, your stock records, how robust are the stock records, how are the internal control processes, all the controls which company has for recording purchases, sales, documentation, stock records, all that be an alternative procedure which you can adopt, which is permitted under SA also. But I
Sure.
honestly request everyone, it is not a very big booklet, but to go through this booklet. I mean, this,
I think that is what the most important point. That is what is most important point, which is drawn by Paresh Bhai, sir. That on ICI.org website, there is a separate page created by ICI as a COVID-19 resource page. Please ensure COVID-19 resource page. That is a separate page. On the home page, you'll find the click link to that particular page. Click on the COVID-19 resource page. You will find very important booklet which talks about inventory verification. In inventory verification booklet, they give all kind of situations In case if you are able to visit, if you are not able to visit, if management is not able to do it, then what? So all different scenario, what should be done in detail, publication is there. Please visit that. Last question which you received from Jitendra Kumar is also on going concern. Again, there is a booklet issued by ICI on a going concern. So I request, please go through the going concern booklet. It has a lot of information available. But as Jitendra has you asked question, I'm putting questions to the faculty. Sir, there is a question by Jitendra. He says that what alternative audit procedures should be conducted for identification of effect of business going concern due to COVID-19?
What alternative? See, effect of business will have to be seen. First, the management will give you their what you could say is projections or their outlook of the business. Now, you will have to identify the projections which they have given earlier and now, whether there is a difference in these projections. And if there is a difference, then why the difference is. And in addition thereto, we ought to be also looking at it, at which industry it is in. Is it an hotel industry? Is it an airline industry? Then obviously there would be an impact which you will have to consider. But if it is say pharma company or for say consumables like say, liver, etc., which would not have a significant impact at all, you know. So, but alternative procedure is your analysis to that what they have given is correct. Now, suppose if you are doing an audit of an airline and airline industry,
I think we are, Paresh bhai, I think your connection is not coming properly. I think we have already replied, and what it's already 8 o'clock also. So I'm not taking much time. Questions we already responded. So I'm thankful to sir for giving you valuable time, and because your experience is the most important thing, and the way you are deal with the topic, I think a lot of case studies, lot of practical issues, these are very important for us, are helpful to us. So my heartful my heartful thankfuls to you, sir. Again, one very important thing for why, because you have accepted the situation in last 3-4 days when the other faculty was not able to come. So that is what is very critical, and it will help us to ensure the show must go on. So thank you so much, Paresh bhai, and we'll be there. We'll definitely come to you again and call you in future to share your valuable inputs for members of that branch. And before I end, I'm also thankful to each one of you, because you are real my pioneer. You are real supporters. You are motivators. They motivate us to do good programs. 156% are still there at 8:10, where the last time is 7:30. That shows your commitment. And without your commitment, without your support, it is not for me, it is for you, and that is shown to me. So I think you all, hats to each one of you to being there till and to ensure that you got whatever is required. I am thankful with my bottom of heart to each one of you to be there present and giving your feedback, supporting whatever is maximum possible. And in future also, I am hopeful that you will continue to give your support. So all presentations, all materials, all case studies will definitely share with you. Paresh bhai will also share his presentation to you. And I think in case if you have still is pending, please feel free to be in touch with me. You can call me, you can send me email, and I will be more than glad to help you on that. With this, I end. Paresh bhai, thank you so much, sir, for giving your time. I end this presentation and I end this series with a good round of applause to all of you. And I'm so thankful to my committee members who have given me support. And I am also sharing the result. I think I share result of third one. First result is this one about the poll which you have done. Second poll which you have given. Right. Okay, and last second poll is this, has been shared with me. So 68% feel it is very good and excellent. So my thankful to each one of you for your feedback. We are going to review on this. Whether you feel that we need to improve it, please be in touch with me, share your feedback, and we'll definitely try to improve in the next time. Thank you. With this, I end the session.